the Bell. Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Scarlet Fu. We're counting it down to the closing bell. And here to help take us beyond the bell, it's our global simulcast with Carol, the Rorschach, Massar, and Tim Stenovec. Welcome to our audiences across all of our Bloomberg platforms here. Stocks at session lows as we set up for a big day. Once we get to those bells, Netflix and Tesla set to report earnings.
Yeah, this is what it says. The Rorschach test says earnings. We got a lot coming your way. Speaking of the markets, down day across the board, it feels like. Many sectors down, but check out the bank sector. They're really taking it on the chin. I've been looking at Morgan Stanley, down about 6.5%. You've got the KBW Bank Index down about 2.5%. So really feeling some pressure there, guys.
And I'm keeping an eye on the companies that are reporting earnings. Look, we're down across the board, but Tesla down more than 4.7%. We can go ahead and round that up to 4.8%. Scarlet. Netflix down 2.7% ahead of earnings.
And I like what Katrina Dudley, Franklin Mutual Series, was just telling us, that both these companies will give us a read of the consumer, but at different ends of the spectrum, right? Because you've got a big ticket item like an electric vehicle from Tesla, and then you have the smaller day-to-day expenses like your Netflix subscription. And how investors and how consumers treat those expenses will tell us a lot about how they're going to spend on other items.
Yeah, and I mean, I think the trajectory has been pretty clear here. We've already started to see softness in consumer spending overall, but when you talk about those big ticket items that require you to either finance it, as most people do with cars and homes here, it really, really changes the dynamic. And you saw that in the mortgage data that we got this morning here. There really is no housing market right now.
Right, you want to buy a house, it's going to be pretty expensive, those mortgage costs, and so people are holding off, and that means they're not going to buy couches, tables, and all that good stuff from me.
All right, let's walk through the numbers real quickly as we await earnings out of Netflix and Tesla. The Dow down about 1% here on the day. The S&P down more than 1%, about 1.4%, right around that 4,300 level. The NASDAQ composite down about 1.6%, Carol.
All right, Netflix is out, guys. The company giving out its outlook, boosting some prices in the U.S., U.K., and France, sees fourth quarter EPS, so we're getting into the outlook, remain $2.15. That's 2 pennies shy of what the street is expecting, which was $2.17.
Boosting prices.
Yeah.
A lot of people were saying, look, we came into this today where they were the only of the major streaming services that hadn't raised prices. They're boosting some prices in the U.S., U.K., and France. 8.76, though, on that paid streaming change. That's big, and I think it's funny because Netflix basically says they don't want us to pay attention to that, but of course that's what we're paying.
Sorry,
I pay attention to it. Do you pay attention to it?
That's the only number that people do pay attention to, Scarlett, right? When it comes to Netflix?
It absolutely is the number that everyone pays attention to, even as Netflix is trying to steer everyone's attention away from subscriber growth and really focus on maximizing profits in its various tranches of offerings. The other thing that among the other headlines are coming out, multi-year pact with Skydance Animation. The fall-winter lineup includes a Squid Game competition show. It's really about putting out there what kind of content they can offer and therefore justifying the price increase. I mean, when your HBO Max has gone up and your Amazon Plus is going up, what else has gone up recently? Hulu, I think?
Yeah.
Well, Disney Plus?
Yeah, and I do want to go back to the profitability, too, because, I mean, this is what Netflix said. They really want investors to come on, and EPS coming in above estimates, 373, and that's a pretty big jump year over year here. But then when you look at the forecast for the fourth quarter here, there is a profitability story, meaning a greater profitability story than maybe the ones that we had been focusing on. Before we continue with Netflix, can we jump to Tesla real quick?
Let's do it.
That's crossing the wire right now. The 3Q EPS coming in at about 53 cents a share. Now, when you do that on an adjusted basis, it comes in at 66 cents a share, which is a miss. The street on an adjusted basis was looking for about 74 cents. So on a basic basis at 53, on an adjusted it's at 66 cents. The cash flow coming in at about $848 million. That's a big miss. The street was looking for $2.6 billion in free cash flow. Once again, it's coming in at $848 million. Overall revenue, a slight miss at $23.4 billion. The street was looking for 24.06 and a very slight miss on gross margins at 17.9%. Carol, the street was looking for 18%.
Yeah, that's a big difference, Tim.
I mean, it's interesting seeing that we're not seeing the stock move significantly post-market right now. I mean, look, these are just knee-jerk reactions. We haven't heard of the earnings call yet. But Scarlett, at the same time, given that these misses, we're just seeing the stock move fractionally in the after hours.
Well, the investors' expectations had been lowered considerably. Over the past 4 weeks, 27 out of 32 analysts cut their third quarter earnings estimates by almost 7 cents. One thing that may be helping support the stock a little bit here is the headline that Cybertruck deliveries are on track for later this year. This this is something that Elon Musk had been talking about.
I mean,
since
what was the year that we saw the
2018.
introduction of the
And
Cybertruck?
Scarlet, there really
This
is
year?
a Santa Claus.
Okay, I will eat my hat.
Did you-
at
did
that,
you
actually.
hear
Why are you
Romaine
laughing
laugh?
so much, Romaine?
No reason.
Does Cybertruck deliveries, does that mean if you deliver 2 Cybertrucks, does that count as
Well,
Cybertruck
first of all, I mean,
deliveries?
I'm sure there could be a catalyst if they actually do make good on that. But the big question is, how many deliveries are there going to be?
I think
we know this is going to be, at least based on what we know now, a relatively niche product, given the cost and, should I say, the look of it.
I think it's fair to say
Yeah.
that, but at the same time, you have to look at what's happened to Ford over the last 18 months with the initial, excitement around the F-150 Lightning, and now we're seeing just renewed interest in internal combustion engine trucks.
Can I just make one quick point, though, Terrell,
Yeah.
too? I do think it's interesting, though. I mean, we're talking about the Cybertruck, but they are standing by their full-year production target, which is 1.8 billion. I
That's
guess
a
the
big
previous
deal,
estimate
right?
was 1.82 million, so a slight revision downward. But that's still pretty significant here that they feel confident enough that they can maintain that production target.
All right, here's some other things in terms of on the Tesla business. Continuing to make progress on their next generation platform. They're focusing on investing in R&D, CapEx with positive cash flow. They talk about the robot currently being
There it
trained
is.
via AI for
Robot.
simple tasks. You know that guy that was in
That
the
was
white
the human
uniform?
being that was in like a...
Yeah,
That was
not
not a
exactly
robot.
a
That was a
robot.
person.
No,
I
it was
feel
a
like these are all
person.
distraction headlines.
Yeah, let's come
We
on.
are starting to see shares actually move lower significantly. Aftermarket, Scarlet, shares down more than 2% in the aftermarket.
Also talking a little bit about cost reduction, implemented upgrades in the third quarter to enable unit cost reduction. So that's obviously something that's on
Well,
their
yeah,
mind as
that's
well.
a big question because it's all
Right?
about the profit margin here for Tesla. I mean, if it's going to continue to be valued as a tech company, it has to maintain those profit margins. Otherwise, it will be valued as an auto company, and by that measure, it's way overvalued.
Yeah, certainly so here. And I'm sure they would make the argument that when you look at all the AI stuff, the solar stuff, and other things that are baked into Tesla, that's the reason for the premium. I don't necessarily know everyone agrees with that, but that's the argument they make. I guess the question, though, too, is sort of what's the growth story, right? If you're talking about 1.8 million production vehicles this year, maybe they get the Cybertruck, but they're not really talking about any refresh of some of the other models as well. So that has to raise some questions about what the growth looks like heading into 2024.
They do
AI
say
training
they're-
computer.
and they do say they're continuing to make progress on the next generation platform, right? So I don't know if that plays into the car, but there has been, right, a lot of criticism that they haven't done an upgrade, come out with some new models, which is very typical in the auto industry.
Yeah, I mean, I think one other thing to think about with Tesla is the way that the company wants to, create the subscriptions as a service and to, create self-driving features that cost a significant amount of money each year in order for people to subscribe to them. So once you buy a car, you're still paying Tesla throughout the duration of that.
I wonder if there's concern that perhaps Elon Musk is a little distracted, and I know we talk about this a lot with Twitter turned X, and whether that influences the way the market looks at how he's moving forward with Tesla.
Yeah. Can we just take a break a little
think
bit
that
from
means, yes,
some other earnings. Should we talk?
from this? Let's just go to SL Green for a little bit. I'm just curious, just to kind of get a read on what's going on with the office REITs. No real change in the shares, but the earnings are out, and we should point out that their free cash flow from operations coming in pretty much on the nose, right around $87.7 million and $1.27 on a per share basis. So they're pretty much coming in line with what the street was looking for. We should point out, though, that total revenue, though, did miss at $173 million. The street was looking for roughly $191 million.
All right, I'm watching what's going on with Las Vegas Sands. Third quarter net revenue coming in just above estimates at $2.8 billion versus $2.7 the estimates. The company's showing that third quarter adjusted EPS continuing operations matches estimates. Shares bouncing around a little bit in the after hours, but higher now by 2.6%. Here's the headline, though. Las Vegas Sands authorizing $2 billion in stock repurchase through the year 2025.
And just quickly, can I just mention Lam Research, right? I love the semiconductor area. This is a stock that's been on a tear up more than 50% this year. It looks like that they're also coming out with their results. First quarter revenue, $3.48 billion. That's a little bit better, Scarlet, than what was forecast, $3.42. First quarter adjusted EPS, $6.85 a share. The estimate was for $6.11 a share, but I'm not seeing anything in terms of movement in the after hours, which is kind of interesting. But as I said, the stock's up more than 50% year to date.
Yeah, so maybe a lot of that has already been priced in. As we look ahead to the earnings calls and what the different companies say to investors, one thing that'll be interesting, especially with Tesla, is their new CFO will be helming that call, right? The steady hand that Zach Kirkhorn provided earlier on is gone. You've got someone who's familiar with working with Elon Musk, but maybe not necessarily communicating all of that to investors, doing the heavy lifting.
Cybertruck deliveries beginning in November 2023. Mark your calendar, everybody.
I know Romaine's
interesting.
you already pre-ordered yours, right, Romaine?
No, I'm not going.
Where would
He's
you
a
park
Rivian
that? Where
guy.
would you park that in Manhattan? That's the question.
I don't know.
All right,
There's a guy on my block who's got 2 Hummers, and I don't.
You have a
Everyone
guy?
hates
You
him.
have a guy?
Is it Arnold?
I don't even know. I don't know. He's got guys taking up like 4 spaces.
All right.
This is Manhattan. That's
I'm
like,
getting-
you know how much a 1 parking space is worth in
Like
this city?
$500,
It's like gold.
$600. I don't know.
That's a retirement
A month.
plan.
I'm going to do a quick thing on a regional. Zion's out in the aftermarket. This is obviously a regional bank based in Utah. Third quarter total loans and leases, $56.89 billion. That's a little bit better than what was forecast, $56.16. But let's go to total deposits. A little bit light, $75.4 billion. The estimate was for $76.51 billion. Net interest margin, 2.93%. That was spot on in terms of what the street was expecting. Third quarter EPS, $1.13, 2 cents better than what the street was forecasting. And you can see this stock, though, unchanged in the aftermarket. So just a little bit of a insight into regionals there, which have been under pressure, as we know. Where should we go, guys?
Shares in
That's
Netflix
it,
are
Carol.
surging.
Oh, is
Go
that
our
it?
separate ways.
Oh, we're done?
Yeah, Carol.
Oh, okay.
Sorry. I mean,
We're
going to
do some more with Netflix and Tesla
I
on
know
our show.
you guys are too. All right.
Yeah.
Well, that was fun. All over the place. Earnings. That's a wrap for our cross-platform coverage. Radio, TV, YouTube, and Bloomberg Originals, guys. We're going to continue, of course, earnings coverage in radio and on TV. But we will see you as a group tomorrow.